This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Busy week. Stocks don't seem to get rattled by much, but could several events change that this week?
Concerned CEOs, they represent an important sector of the economy. And today, travel executives paid close attention to the president's tweets.
Targeting cancer, there's a shift underway in how researchers want to treat the disease, resulting in some new success stories. Those stories and more tonight on Nightly Business Report for this Monday, June the 5th. Good evening, everybody. I'm Bill Griffith, and tonight for Tyler Matheson.
And I'm Sue Herrera. Welcome, everybody. Well, this could be it. A number of events this week, both domestic and global, could test the market's resilience. Stocks have been melting up, trading near record levels, despite some of the recent upheaval and uncertainty. But in the days ahead, a jam-packed economic calendar, hearings on Capitol Hill, and elections in Europe have the potential, perhaps, to reshape that landscape. Bob Pisani takes a look at the road ahead for investors.
On the surface, everything looks calm for the markets. Major stock indices are at or near historic highs. Volatility is near historic lows, and bond yields are at the lowest level since the election last November. But two big events on Thursday could be market movers. First, the British elections, where it's still not clear if last weekend's attack at the London Bridge will swing sentiment for or against incumbent Theresa May. Back in the U.S., former FBI Director James Comey will testify before the Senate Intelligence Committee on how his agency assessed Russia's role in the November election. He will certainly be asked if President Trump asked him to end the probe of former National Security Advisor Michael Flynn. We'll also have the European Central Bank's decision on interest rates on Thursday. Despite a clearly improving European economy, ECB Chief Mario Draghi is not expected to raise rates or even reduce the size of their bond buying program. We'll watch for any signs for a change in thinking. Finally, the Fed meets next week, and despite some soft economic data, recently traders are betting there is a 96% chance the Fed will raise rates another quarter point. That would be the third interest rate hike since December 2015. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And as Bob just mentioned, the British election Thursday is on the minds of investors both here and, of course, across the globe. And it follows the horrific terror attacks over the weekend, the country's third in as many months. Wilfred Frost reports for us tonight from London.
A vigil on the banks of the River Thames to remember those lost in Saturday's terrorist attack in London. This as campaigning for the country's general election once again heats up after taking a brief pause out of respect for the victims.
While it was right that we should pause to show our respects to those we have lost and to ensure all our energies were focused on responding to the immediate aftermath of those events, it is also right that our way of life and our democratic process should go on.
So it's no surprise that security has remained top of the agenda with just 3 days left until polling day. Prime Minister Theresa May has tried to frame her main opponent, Labour leader Jeremy Corbyn, as being soft on police powers in the past, while he has hit back, criticising her for cutting police numbers when she was Home Secretary from 2010 to 2016.
You cannot protect the public on the cheap. The police and security services must get the resources they need, not 20,000 police cuts.
Either way, politicians of all sides have increased their rhetoric on preventing terrorism. Prime Minister May outlining the role the internet played in the attacks.
We cannot allow this ideology the safe space it needs to breed. Yet that is precisely what the internet and the big companies that provide internet-based services provide.
Under the spotlight are messaging services with end-to-end encryption, like Facebook's WhatsApp. Recently, the Home Secretary Amber Rudd described as completely unacceptable that the government could not read such messages. Aside from hosting the vigil tonight, London Mayor Sadiq Khan expressed his anger at the motivations behind the terror attacks.
I'm angry and furious that these three men are seeking to justify their actions by using the faith that I belong to justify their actions. The ideology they follow is perverse, it is poisonous, and it has no place in Islam.
He also said that London would not be cowed by terrorism. For Nightly Business Report, I'm Wilfred Frost, London.
By the way, following that attack, Facebook said it wants to make its social media platform a hostile environment for terrorists. In a statement, Facebook said, and I quote, "Using a combination of technology and human review, we work aggressively to remove terrorist content from our platform as soon as we become aware of it," end quote. And separately, Twitter is also working to tackle the spread of militant propaganda on its website, saying it has no place on its platform.
Meantime, in the Middle East, 4 Arab states cut diplomatic ties with Qatar. Saudi Arabia, the United Arab Emirates, Bahrain, and Egypt want to isolate the Persian Gulf Emirate over policies towards Iran and Islamist political and military groups. That rift was felt in the oil markets as traders grew concerned that the split could impact the deal to reduce oil production. Hadley Gamble has more tonight from Riyadh.
It's certainly the most severe diplomatic crisis to face the Gulf Arab countries since the GCC's inception some 38 years ago. The UAE, Bahrain, and Saudi Arabia, as well as Egypt, calling out Qatar, saying they've been supporting terrorism. And they're closing the borders, blocking air and maritime space, with regional airlines, Emirates, Etihad, Fly Dubai, and Saudi Airlines all suspending flights as of tomorrow morning. It's a country that depends at least 90% on imports to make ends meet. And all of this coming just a few weeks after what has been lauded as a major victory for U.S. President Donald Trump in the region. It was his first major trip abroad. He came to Saudi Arabia first and talked about bringing the Muslim world together. Earlier today, we heard from U.S. Secretary of State Rex Tillerson saying that the U.S. was open to being a mediator.
We certainly would encourage the parties to sit down together and address these differences. And if there's any role that we can play in terms of helping them address those, we think it is important that the GCC remain unified. I do not expect that this will have any significant impact, if any impact at all, on the unified fight against terrorism in the region or globally.
It comes at a sensitive time for the United States, with 4 major military installations in the Gulf Arab countries. 2 in Qatar, an air base and an army base, as well as another air base in Kuwait and the 5th Fleet anchored in Bahrain. For many in the Gulf Arab states, Qatar has had a questionable foreign policy for years, supporting the Muslim Brotherhood after the Egyptian revolution back in 2011, as well as Hamas leaders, and even hosting a diplomatic mission for the Taliban. Another sticking point, the country's media outlets, including Al Jazeera. Saudi Arabia has often criticized Al Jazeera's coverage as unfair. But while the geopolitical implications could be the more immediate problem, a longer-term issue will be economic relations in the Gulf. Shutting down air travel between the UAE, Saudi Arabia, Bahrain, and Qatar could have major implications for the private sector, a group already hit hard by 2 years of lower oil prices. For Nightly Business Report, I'm Hadley Gamble in Riyadh, Saudi Arabia.
And despite these geopolitical tensions, stocks closed with just modest declines today. One market watcher said that investors were growing cautious given the upcoming events later this week that we just talked about. The Dow, when all was said and done, lost about 22 points, closed at 21,184. The Nasdaq was down 10, the S&P down 3. And with all of the major indexes still near records, there seems to be a little that can rattle this market. Mike Santoli takes a look at why.
The stock market's signature move lately has been the shrug. Stocks seem to shrug off any bad news, while investors shrug in confusion over why nothing seems to disturb the rally. Muted U.S. economic growth, terrorist attacks, dimmer hopes for bold fiscal policy moves, and falling Treasury bond yields are among the potential threats that seem not to matter much to stocks lately. Why might this be? Well, for most of this bull market, low interest rates and a slow economic expansion have been converted into decent profit growth by companies and into rising stock prices by the market. This year has been more of the same. Meanwhile, the earnings of big companies are on the rebound. What's more, the world remains saturated with cheap money, which continues to find its way into financial markets. The central banks of the U.S., Europe, and Japan combined continue to grow their holdings of bonds at a brisk clip for now. All of these factors have allowed investors to take the lack of visible progress on the Trump economic agenda in stride. Of course, it's worth asking what might be out there to disturb this resilient bull market. Wall Street veterans are watching the corporate bond market for signs of any oncoming stress. Many longtime bond fund managers say they see little value in this market, though, and overall debt levels on companies' books are quite high. This could place investors on alert for any weakness in credit markets that might bleed into stocks, as happened in late 2015 and early 2016. Another potential risk? The market could keep barreling higher for a good while longer and get the Federal Reserve worried about the hazards of a financial bubble. Strategists at Bank of America Merrill Lynch have argued that this would become a growing threat if the S&P 500 were to rise another 8 to 10% or so fairly soon, and the Fed felt it needed to cool off investor speculation. The Fed's widely expected to lift short-term interest rates again next week, and before then, investors will confront former FBI Director James Comey's congressional testimony, a UK election, and a European Central Bank meeting, all of those on Thursday. If nothing else, these events should test the market's ability to keep shrugging off distractions in what has been a relentless upward march. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
And Michael Farr joins us now to discuss how all of these events could shape the markets this week. He is president of the money management firm Farr, Miller & Washington. Good as always to see you, Michael. Welcome back.
Thank you, Sue. Nice to be here.
You know, we laid out the case of what might be able to influence stocks, but you say at this point, given what's lying ahead for the market this week, investors need to be very cautious.
Well, and I've been saying that for a while, Sue, and geez, I listened to the list and I listened to Rick Santoli and everybody else. I mean, everything was in there except for the kitchen sink, I think, of all of the things that maybe we should be concerned about. You know, so I get very simple when things get complicated. Stock prices are high. They've been high for a long time. We haven't had any significant correction in a long time. This is also, I mean, I've heard more people call for a market top than I can even remember, and the market top just won't happen.
Right.
So you get into one of these periods where you say, well, maybe the market's never going to go down again, and that's usually when you're about to lose. So, yes, I say be cautious, and I think that these conditions probably can't go on forever, but complacency is really an enemy at this point.
You don't sound like you're putting money to work right now, then. Is that the case?
You know, I always am, Tyler. I mean, if we get fresh cash today, I can't market time. You know, certainly the market could go up, continue to climb this wall of worry. There is ample cash, and interest rates continue to be low. But there are still some bargains out there, but I am really cautious. And if you look at the returns this year, 5 stocks, Apple, Google, Microsoft, Amazon, and Facebook, have produced about a third of the market's overall return. You didn't own those, you're up about 6%. You own them, you're up 9.5%. So leadership is being concentrated. You need to make sure that you know what you own, why you own it, and that these companies have real earnings and real balance sheets. I mean, there's a lot going on this week. Thursday, I'm watching for Comey's testimony. I think that could be a game changer here. And of course, you know, we made the mistake last year of presuming that the Brits wouldn't vote for Brexit, and they did. So you can never trust a British election.
Right. That's, you know what, it is one of those weeks that has the danger of being an inflection point, if you will, for the market.
No question.
If you are a long-term investor and you have decent gains in some of the stocks that you just mentioned, do you take some money off the table as almost protection against the whipsaw?
Yeah, I think what you have to do, Sue, when markets get like this and you know that it's that the risk is higher, you have to go back to your investment plan and your asset allocation. Maybe your stock position has gotten too large. Maybe your goals have changed and you've gotten closer to that time when you should retire and perhaps a little less money in stocks, a little more money in bonds. So check your investment discipline, make sure that you haven't moved outside of your investment policy, and that you can stay with what you have for 5 or 6 or 7 years. If you need money for the short term, it should not be tied up in long-term investments. Do it now before you have to.
Good advice, as always, Michael. Thank you. Michael Farr with Farr, Miller & Washington.
Still ahead, the president calls his executive order a travel ban, but executives in the travel industry call it something else.
President Trump is doubling down on his travel ban. In a series of tweets, the president said it was a mistake to revise the first order he signed and suggested the White House should issue a much tougher version. He tweeted, quote, "People, the lawyers, and the courts can call it whatever they want, but I am calling it what we need and what it is, a travel ban." The White House and other members of the president's staff have insisted in the past that it was not a travel ban.
And the president's tweets are not going unnoticed by the travel industry, and the renewed talk about a travel ban comes as many high-profile executives attend one of the year's biggest hospitality conferences. Susan Lee spoke to them.
Calling it what it is, a travel ban. The U.S. president also asking for an expedited Supreme Court hearing on the watered-down version of his travel ban and promising extreme vetting of travelers, a message that may deter people from making trips to the U.S. in the future.
Sometimes these tweets that come out early in the morning talking about a travel ban, they are very blunt. There's no nuance in it. There's no welcome in it.
It's one of the biggest threats to a booming travel industry, with record tourist arrivals to the U.S. last year and forecast to grow for the next 5 years, according to the U.S. Commerce Department, a longer-term trend that's being underpinned by global spending.
People want to travel. People are valuing experiences today more so over goods. And so that trend and having more middle-class travelers in the world today than ever before is providing part of that resiliency.
Terrorism is another threat to travel, with 7 killed and nearly 50 injured in this weekend's tragic attacks in London, the third in the UK in as many months. Tourist numbers to Britain may drop off in the near term, but won't impact travel around the rest of the world.
I expect, notwithstanding these tragic events, and they're terrible for the people of the UK, that we're going to have a reasonably good year, that the impact will be isolated.
In fact, despite over a dozen deadly terrorist attacks the last 2 years in Western Europe, the region was the most popular place to go in this year's first quarter. Another sign that you can't keep travelers away for too long. For Nightly Business Reports, I'm Susan Lee at NYU's International Hospitality Investment Conference.
At the White House, the president outlined a plan to privatize the nation's air traffic control system. Such a move would take the job out of tracking and guiding planes away from the Federal Aviation Administration. The president called the current system antiquated and stuck in the past.
After billions and billions of tax dollars spent and the many years of delays, we're still stuck with an ancient, broken, antiquated, horrible system that doesn't work. Other than that, it's quite good.
Commercial airlines have long supported the idea of privatizing air traffic control, and the Air Traffic Controllers Union is also generally supportive of that proposal, saying it could make the system more efficient. At today's announcement is part of a broader week-long push to promote various infrastructure proposals.
By the way, things are looking up for the global airline industry, which raised its profit forecast for this year. The International Air Transport Association, which represents more than 200 airlines, says it expects travel demand to increase as the worldwide economy looks to post its strongest growth in 6 years.
Alphabet breaks 1,000. That's where we begin tonight's market focus. Alphabet launched its IPO back in 2004 as Google, and today, the parent company of the search engine passed the $1,000 threshold just a few days after Amazon did it. Alphabet finished the day up a fraction to $1,003.88. Nutrition supplement company Herbalife cut its revenue outlook for the current quarter, saying its new sales guidelines set by federal regulators are cutting into results. The company, which now sees revenue falling as much as 6%, also cited weakness in its Mexico market. Herbalife shares were off nearly 7% to $68.99. During its annual developers conference, Apple announced updates to its software and its products. The company plans to offer Amazon's Prime Video service on its Apple TV platform and said it is making improvements to its iPad and MacBooks and will offer a more enhanced version of the Siri service on the Apple Watch. Apple was down 1% to $153.93.
Medical device maker Dexcom says it saw its shares rise after Apple said that improvements made to its watch will make it more compatible with Dexcom's glucose monitor. Those two products will connect through Bluetooth. Dexcom shares gained 5% on that news to $71.19. But drug maker Mallinckrodt's shares were hit after known short seller Citron Research released a report criticizing the company's top-selling medication. Citron said that an executive at Express Scripts, which is a distributor for Mallinckrodt, called the drug overpriced for its value. Mallinckrodt shares down 5% to $40.49.
Coming up, if you can figure out what makes a cancer tumor tick, can you then figure out how to treat it? Well, some researchers say yes. Toyota quietly sold its entire stake in electric car maker Tesla. The sale marks the end of a partnership between the two companies, which was first announced back in 2010. Toyota's stake amounted to just under 1.5% of Tesla as of last summer. The Japanese automaker said the sale was part of a regular review of its investments.
By the way, if you own a Tesla, you may start paying more for insurance. National insurer AAA is reportedly raising its prices for Tesla's Model S and Model X, citing higher than average claim rates and repair costs for the two cars. According to Automotive News, premiums could increase by as much as 30%.
Thousands of doctors, researchers, and medical company executives are meeting at the biggest cancer research conference of the year. And this year, there's a big shift in the way cancer is being targeted. Meg Terrell is in Chicago.
For decades, cancer has been treated with surgery, radiation, and chemotherapy. But in recent years, major strides are being made in targeting drivers of cancer more precisely. The benefits of that approach were on display at the American Society of Clinical Oncology meeting this week in Chicago, the world's largest cancer research conference.
And that takes us away from the general idea of saying, gee, is it a lung cancer, is it a breast cancer, is it a colon cancer, but instead to ask the question, does the tumor have this DNA repaired?
One major step forward. Just weeks before the conference, Merck received a landmark FDA approval for its cancer drug Keytruda. For the first time, a drug was approved based on an underlying driver of cancer, rather than for the specific location of cancer in the body.
It's the first time that the FDA has approved a therapy across many different tumor types based on a molecular definition.
That same philosophy led to one of the conference's major success stories, Loxo Oncology, a young biotech company with a drug targeting a rare mutation driving cancer.
It's really almost a key in a lock phenomena. It's such a specific, dramatic effect that the patients know it right away. They feel better right away. Their symptoms get better right away.
But delivering targeted therapies requires that people with cancer are tested to see what genetics are driving the disease, something Loxo CEO Dr. Josh Belenker says doesn't happen frequently enough.
If there's one takeaway or call to action that I'd love people to hear, which is get your tumor tested. Figure out what is making it tick so that you know what is the right therapy that can be matched to your tumor.
The conference also brought updates in immunotherapy, a new class of medicines that unleash the body's own immune system to better target cancer. And with all the new advances come new potential costs. The price of cancer medicines continued to be a theme at the conference.
There's been a lot of work, including by ASCO, to try and link the prices of drugs and other treatments to how well they work. But there's general resistance to it because, companies, when they have their product, they want to extract as much as they can from it, even if it doesn't provide big benefits to patients.
As cancer care evolves, so too will the question of how to pay for it. For Nightly Business Report, I'm Meg Terrell in Chicago.
And that does it for us tonight. I'm Sue Herrera, and we want to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith. We thank you very much for your support. Have a great evening. We'll see you tomorrow.